Be Wealthy and Smart, episode 1204.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about the new bull market because the market's up 20%, and technically that means it's a new bull market. The October lows have held, as I said they would. So far, so good. And there's still massive bearishness out there, which is a contrarian indicator, and that means it's bullish. Now, year-to-date performance is very interesting. The S&P 500 is up 12.43%. The Dow is only up 2.41%. And the NASDAQ is knocking it out of the park, up 26.7% year-to-date. That's pretty astounding for roughly 5 months of performance. But the problem is only a handful of NASDAQ stocks are providing that performance. About 6 stocks are really responsible for most of those good numbers. And that's a problem. You want to have wide participation in the market. That's a healthy bull market. But it doesn't mean that that won't happen. It just means it's not happening now. Stocks such as Nvidia, Meta Platforms, which was Facebook, and Amazon are among the stocks with the concentrated performance. As much as 11% of the gain in the S&P 500 this year is just from those 3 stocks. Now, as I said, many people are still bearish. They're expecting some sort of a terrible crash. But here's the thing. Earnings have been better than expected, and that's boosting the market. 80% of futures contracts are saying the Fed is going to pause next week and will not raise interest rates. And usually the Fed follows what the futures market predicts, so they probably will pause next week. But inflation is a lot better than it was a year ago. The Consumer Price Index last March was up 5%. In April, it had dropped slightly to 4.98%, and in May, the Consumer Price Index was 4.93%. Now, not a huge move, but nonetheless a move in the right direction. A year ago, the CPI was at 8.26%. So from 8.26% a year ago to 4.93% last month, inflation is trending lower. So that's a really positive thing, and that's helping to buoy the markets as well. Now, besides inflation trending lower and good earnings surprising investors, energy prices are also down from a year ago, and that's positive because energy is one of the drivers of inflation that tends to find its way through the entire economy. So when oil prices go up, that tends to bring prices of a lot of things up. Because when you're delivering things by truck or you're delivering things by air, you've got to pay higher energy prices, so you have to raise your prices. So lower inflation, a pause in interest rates, lower energy prices, better than expected earnings, those are all good indicators. Now, I have been expecting some weakness in June, so I wouldn't be surprised if later this month we did see a pullback. But I would use that as a buying opportunity, and I'm still bullish on the year. But not everyone feels that way. Some people think even though the S&P 500 has just cleared a 20% increase from the bottom, that a new bull market won't begin until the S&P 500 clears its prior high from January of 2022. Until then, they think it's a bull run in a bear market. Well, that remains to be seen. But it looks like we've avoided the deep recession that many were predicting last year. And the fact that most people are still bearish is a good sign because the stock market likes to climb a wall of worry. That means when everybody's worried that the market's going to go down, that's when it can comfortably advance. And when everyone's sure that the market's going to continue on to new highs, that's when you have a reversal. But the reality is we've made higher highs and higher lows, and that's positive. Everything in the charts is showing that this is a bullish market. Again, I'm expecting a pullback sometime in June, but I think by the end of this year, we're going to see some really good numbers. And it won't be long before interest rates are going to have to start to come down, because every time the Fed has increased rates too quickly and too close together, they have reversed it after a period of time. They realized that they overdid it, they did it too quickly, and they had to reduce rates and reduce and reduce and reduce. So it ends up looking like a mountain. On the left side, you're raising rates, raising, you're stair-stepping up quickly. You get to a point where you're, we've overdone it. Now we have to take back some of those interest rate increases. I don't think we're there yet. We're just at the pause, and they're evaluating the situation. But I think in the future, we will start to see interest rates come down again, which will give us a boost in the housing market again, and definitely in the stock market. To me, the bearish year that we had last year is going to be with people for a long time. It was very frightening, it was very sharp, and that's going to create that wall of worry that we need to continue this bull market. If you haven't yet subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are in my wealth mentoring library on my website at lindapjones.com/podcasts. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.